we are looking at a dual threat to Bitcoin's price, a demand shock and a supply shock. First, the demand side. For the last 2 years, these corporate treasuries have been a massive source of buying pressure. Strategy alone bought 41,000 Bitcoin in January 2026. If these companies stop buying because their stock prices are tanking and they can't raise capital, that is a huge chunk of demand that just vanishes. Second, the supply side, and this is the scary part. If companies like Bitmine or the smaller players identified by Galaxy Digital run out of cash, they become forced sellers. It creates a feedback loop. Prices drop, companies get margin called, or they need the cash. They sell Bitcoin. Prices drop further, and further companies get margin called or need the cash. We've already seen this movie play out before. We saw it with Luna. We saw it with Three Arrows Capital. Forced sellers don't care about chart support levels. They sell because they have to. And we'd already seen signs of this. On-chain data shows that Marathon Holdings, another major player, recently moved about 1,400 Bitcoin to exchange wallets. Now, moving to an exchange wallet doesn't mean that they're automatically going to sell, but it usually means they want the option to sell. So, is it a time to panic? Are we heading to $8,000? To be blunt, almost certainly not, and here's why. The $8,000 scenario is absurd. The average production cost for a Bitcoin right now, just the electricity, is estimated between $40,000 and $87,000 depending on the miner's efficiency. If Bitcoin fell to $8,000, it would be trading at a 90% discount to its production cost. The entire global mining network would shut down overnight. It would be a catastrophic failure of the network incentives that has never happened in history. Furthermore, the institutional floor is much higher than people think. BlackRock's IBIT ETF alone holds over $54 billion in Bitcoin. Sovereign wealth funds are buying, pension funds are buying. These players are not momentum traders using 100x leverage. They are allocating for the next decade. If Bitcoin were to drop to $30,000, let alone $8,000, the institutional capital on the sidelines would likely step in aggressively. So, what is actually happening? We are likely witnessing a healthy consolidation. The treasury model isn't broken, but the copycat model is.